This is going to be the introduction video to what is trading, and also we're going to get into how I view the markets just a little bit. That'll be more in the later videos, but for this current introduction video, we're just going to go over what trading really is. So, obviously, when you see online about trading, day trading, all that stuff, you see people making $10,000 a day, $100,000 a day, turning $100 into $1,000,000, and most of them are just lying. They are lying to you, and they are not telling the truth. They tell you that you can make 100% every single day of the month, every month of the year, and that you're going to become a millionaire in 2 weeks. And that is just completely false. It is not what trading is. Trading is having a predictable percentage per month that you are trying to make based on your edge in the market, right? So the biggest institutions, the biggest hedge funds, and the wealthiest and richest people in the world are not trying to make 100% every single day, all right? They are trading with billions and billions of dollars, and they are looking to make 5% a month, 6% a month, 7% a month. They're not looking to flip $100 into $1,000,000 in 2 weeks. That is not their goal, because they know what real trading is. It is using a edge that they have constructed using all various methods that obviously the normal public does not know about. But they're looking to make consistent gains on a yearly basis. All right. So that's basically what trading is. And I mean, for a better definition of trading, it is trading is gambling with risk management. Okay. That's basically what trading is. It's gambling with risk management. All right, because you are putting a certain amount of risk behind an idea of where you believe the market will go. All right, so you're risking your money and making a bet on where you think the market's going to go for the day, for the week, for the month, whatever kind of way you decide to trade. That's basically what trading is. Now, it's not 100% gambling, because you can find consistent things that happen in the market over and over and over again, and that's what an edge is. All right, that's why you need an edge in the market. Now, an edge is not everything, because to trading, we'll get rid of this, you have your edge, obviously, and you also have risk management. Okay, edge, risk management, and obviously your psychology. Okay, now everybody focuses on the edge. Everybody wants a holy grail. They want the best strategy. They want the 1 to 100 RR strategy that hits every single day of the week, and they can become a millionaire in 1 month, and they're set for life. And that is why 99% of traders lose all of their money and they quit within less than a year. All right. And this one right here, risk management, is the most overlooked part of trading, because you could have the best edge in the world, but if you cannot manage your risk and you decide that, okay, I just won 3 trades in a row, let me up my risk from 0.5% to 5%, and you lose 2 trades in a row, you just lost all of your progress, even though you have the so-called holy grail strategy, right? So risk management and risk to reward is paramount to your edge, because there's people who have terrible strategies in the market that are low quality that a 5th grader could learn, and they are making more money than people who spend 3 years studying the charts, but they can't control themselves and they can't seem to manage the risk. All right, risk management and psychology will beat edge every single time, without fail. All right. So yeah, that's basically what trading is. And how long is this video? It's only been like 5 minutes. We can go over just a little sneak peek into the way I view the markets. So I view the markets through on the daily, through highs and lows and time, being the yearly open, quarterly open, monthly open, weekly open, and lows and highs. That's it. And that's all you really need is highs and lows and a understanding of time. All right. And by time, I mean the open, high, low, and close of candles. All right. Because there's a monthly candle, here's a weekly candle, here's a daily candle, daily candle, daily candle. These all make up one weekly candle. All right. All these weekly candles right here make up one monthly candle, and every single candle prints the exact same, just some are printing faster and some are printing slower. Okay, and highs and lows, that is where liquidity and sell stops and buy stops, that is where they rest within the market. Now the market doesn't see your one NQ contract on your top set funded account. All right, so don't worry about the market seeing your fucking orders, because they don't see them, I promise you. But for big institutions and hedge funds and the big players in the market, smart money, who have billion-dollar positions, all right, their orders are shown in the market, and their orders rest within highs and within lows. That is why you see price sweep above a high, all right, sweep above a high and reject. That's why you see price sweep below low, all right, sweep below low, and we reject. It happens on every single time frame, all right, not just the daily. It happens on the 1 hour. Okay, we dip below low and we pump. Okay, but if you're going to pattern trade, so-called, this is what's called turtle soup. If you're going to pattern trade that, you're going to lose more money than any other strategy on the planet. All right, you have a better chance of trading RSI indicators and VWAP and all that bullshit that is taught. You have a better chance of making money with that than pattern trading turtle soup. All right. Okay, turtle soup, pop above a high, reject. That's what it is. But what you need within turtle soup is time. All right. So that's literally the only way I view the markets, is highs and lows and time. All right. And that's all I'm really going to explain right now for my strategy. There's a lot more that goes into it, obviously, but that's basically the lens that I view price, which is highs, lows, and time, because that's all you really need. Anything more than that is just analysis paralysis, and you're just adding more stuff to kind of sound smarter than you really are, and it's pointless, because you can have the greatest results in trading with highs, lows, and time. That's all you need. So just to recap what trading really is your edge, which is your strategy, okay, which is what you need to trade, your psychology, I don't even know if I spelled that right, maybe I did, and which is your mindset, your ability to stay disciplined, patient, to make good decisions. That's what psychology is. And lastly, your risk management, which is you risking the same amount of money per trade, all right, not changing it based on your feelings, not changing it based on your emotions, and it is exiting trades when you know it is the correct time to exit, and you're entering trades when you know it is the correct time to enter You're not risking money on stupid trades. You're not risking money because you feel the need to gamble and make money. That is not risk management. That is being a degenerate gambler. And if you're going to do that, you might as well go to the casino because you have a much higher chance of making money there than gambling in the markets. All right. But I think for the first episode, that was all that we need to cover. And the next episode, we will go over probably price, just the turtle soup aspect, and the mechanics of the market, how the market books, why it moves the way it moves, why does it expand crazy here, and then why does it consolidate all over here. All right, we're going to go over that, and that's pretty much what we're going to go over the next episode. That's about it, and I hope you guys enjoyed this first episode.